Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hotspots and opportunities in the markets. Today, things definitely have slowed down a bit, so not as dramatic and crazy as it's been the last couple of days. But before we get into that, first, I am Todd Rich. I am with Nadex. With me is my good friend Brian Caprice from Keep Trading Simple. Before Brian and I get into it, I need to share that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. All right, so where we're going to start today, we've got some economic events coming up, and I think that we're going to be seeing some numbers coming out of the US. Let's flip this over here. I actually am going to, as Brian starts us off, I'll eventually bring up the Nadex platform because I want to show where you can actually participate in the markets we're going to talk about right now at Nadex. So let's take a look at what's going on. I think we've had some interesting numbers around non-farm payroll.
We weren't necessarily expecting this big of a boom, but the ADP non-farm employment numbers came in over 3 times as high as what the original forecast was expected to do. So that's great news. There's going to be a multi kind of piece, today. I want to kind of talk about this first, but this is a very important number. The ADP non-farm number has kind of stolen a lot of just the traditional non-farm on Friday's numbers. Right now, the market is going to be in a little bit of a scramble. And as you can see, last time, the beginning of January, it was a horrible number. It came in basically twice as worse as what they had expected. Now they expected positive, but again, coming in 164,000 new jobs and change versus the 48 expected, that's a great number for our economy. All right, now a couple things that I want to talk about here. First is, what does that do to the stimulus? Actually, there's an interesting article that's out this morning. It's on Bloomberg.ca. I'm telling you, CA has like all the ins for everything. It's kind of funny. But there's an article out there talking about how if the U.S. economy is improving, this is going to complicate Biden's stimulus plans. Now, does Biden need other people to jump in to, get his plan through, the 1.9 trillion? The answer is no. I mean, Democrats can do it solely on themselves, but they would need 100% participation in that one. So this is kind of an interesting piece for this. We're seeing increase this last month. Home builders said demand remained robust. So again, people are still building new homes. Businesses are looking better. Employment situation seems to be getting better. Vaccines are starting to roll out. Kind of an interesting scenario that Biden's stepping into here, And then again, restaurants are back. I know at least in some states, movie theaters are starting to open up at lower capacity. So a lot going on, right? So that's an interesting play. But what we can do with it now is, and again, I'll show you the NQ in a second. This is kind of the second part of analysis here. This is a very, very big beat. I would like to jump ahead, not only for today, but for 2 days from now, and talk about the non-farm number. Now, non-farm, like I said, it's kind of gotten stolen a little bit. Some of the thunder has gone back to ADP, but the non-farm number on Friday is supposed to be 62,000 increase. Oh, you switched over, Todd, already.
Oh, yeah. Oh, I thought while you were talking about it, do you want to bring it back?
No.
While you're talking about it, I thought we'd show it.
Oh, no, not yet. Hold on. Switch it back. I want to see these numbers real quick.
I'll flip it back. Sorry.
There we go. I was like, wait, I'm talking and it's a black screen. No. Here's what the forecast is for Friday, right? It's expected to be at 62,000. Well, last time you can see we had a 60,000. And again, it was double the miss. So right now, Wall Street has got to be kind of saying, hey, the ADP non-farm change or the employment change came in 3 times as high. Is this non-farm number on Friday going to also be the same scenario? Because again, they're not right a whole lot, but you can see last time, this is Friday's non-farm number. 60,000 forecast came in at 140,000. Today's number was expected to be 48 at 74. And again, you can see that they kind of follow the same trend here. So Wall Street could be scrambling today. And again, going across to something like the NQ.
Before we jump over there, I just want to kind of share this real quickly, just because this is exactly on this. On these economic numbers, if you're not aware, we've got event contracts so that you can actually trade binary options on these. And it's rather interesting. We've got jobless claims tomorrow. So where it's initial jobless claims, there's a number and there's a probability. And you see that these the forecasts, you're right, they're rarely spot on as of late, and they've been off pretty dramatically. So the question is, are they overestimating or are they underestimating? What is it that you want to do? There's ways to play this just with a fun binary contract. But what Brian's talking about, these non-farm payrolls, I mean, we actually saw this happen already, where the at the money contract is our non-farm payrolls. I mean, it's definitely, they're expecting to be higher than 50,000. This thing went above a 50-50 probability as they start looking to see, hey, clearly the initial number that people were expecting was a little too low. So kind of a fun way to play these in a defined risk, defined reward way. Oh, right. We're not going to have charts on these. Of course not.
Nope.
But but you
that function's not in yet.
You can't see. Yet. Right, we don't chart these, but you can see your risk reward if you were to trade one of these, calculated on the order ticket over here. In any case, I wanted to call out our event contracts. We've also got the unemployment rate coming up on Friday. So, if we're adding jobs, if people are finding jobs, you would expect the unemployment rate to drop. And it's rather interesting is we've got two levels in here where people really are kind of predicting the market's really not sure where this is going to come in. So interesting opportunities if you wanted to play some of these in event contracts. Now, you're right. This is telling us the economy is doing better. What does this mean for U.S. equities? What does it mean for maybe some of the commodities? Brian, I'm going to flip it back over to you because I think talking about these equity markets makes a ton of sense now.
Tag, you're yeah, and you mentioned that they until recently they're not, well, they get it right about once a year, right? So you can see, I don't know if you guys can see it, but down to last year in 2020, they got it right once. Every other time it was a miss. And in 2019, they also only got it right once. In 2018, they didn't get it right one time. And in 2017, they also did not get it right one time. So, people ask for, what type of opportunity. Again, this is one of those numbers. It's kind of like oil inventories. Okay. There is some type of small primate with darts and a dartboard, and that's how you pick the forecasts. Because look, guys, I mean, they are never right. Okay. Now, speaking of that, let me show you the chart, and then we'll go to oil, and we'll talk about the primate that's throwing the darts there. Here's what NQ is, right? So yesterday we talked about how we were continuing to rally higher, and we're getting to an area, and we wanted to see if it was going to be in a potential turn area or boom, right? Well, we got up to the area that we're looking for. On the hourly chart, we actually do have that kind of failure to go higher type setup that we're looking for, kind of sitting right here. Again, we love when it can't push as high, but right there. But the news we had today is a very big piece. Okay, so could we have a purely technical pullback in the NQ? The answer is yes, we could. We've had that kind of confirmation pattern. It does appear to be looking like that. It looks like it's trying to go down. But again, where the retail trader has not had the opportunity yet to trade that number that is much, much better. And again, the talking heads, the media, they absolutely have to talk about that number. That's a huge number that the jobs was that great. Okay. And again, could that stimulate the economy going higher? Yes. Could it hurt it because now stimulus is more at risk? Absolutely. So a couple ways to play this if you guys are looking for something short. I would be looking for profit targets potentially back down, really down here in the 13,360 range if you're looking to go short. Obviously, you guys know I'm a big fan of the sci-fi genre. And again, if we get a break through the top, this is also set up for a Harry Potter type trade, right? Whenever we have a zone that gets broken, we're looking for a rally past it, a base, and then a pullback, and that gives us our established level of risk. So if there was absolutely no news, it would be set up for a short. And again, if that's something you want to take, make sure you have acceptable risk levels. But if we're able to break above this 13,600, again, I'm looking for a break above a base and then a pullback. And then, hey, who knows? Maybe they'll say, hey, stimulus is still coming, even though everything is great. And then, bam, this thing launches up to 13,800. So a couple different ways you could play it.
Yeah, let's just drop it over to the Nadex platform quickly. Here we are on the binary options. I got a 30-minute chart up here, but it looks identical to yours. Here's that level that you're talking about, and watch it. I think 13,600, right around, just roughly where we are right now. You could see that level. I'm trying to spread it out so we can see these binary options. I mean, you can see all the strikes that you've got. I mean, all the way to the upside. I mean, there's definitely some opportunity. Remember, every one of these binary options is either going to go to 100 or to 0. So you can certainly try to pick some ranges or pick your target. I mean, you can see how this thing has really blown through a bunch of strikes. I mean, and all these ones that it blew through earlier today. I mean, these are all trending up towards 100 right now. I mean, it was quite an opportunity. So binary options, definitely one way to play this. As I'm shrinking it in again, as Brian mentioned, I think you got to wait and see what happens in about 20 minutes. Do we pop up? Do we then find some type of basing and some support here, and then does it take off, or do we roll over? Because at a technical level, we're there. Should I take a look? Should we jump over quickly just while we've got it? I mean, I just want to take a look. What do we have in call spreads in the Nasdaq? Here, we'll pull up the U.S. Tech 100. Let's pull up these daily call spreads. Let's just take a peek. Again, one of the ways I like to be able to visualize this is you can click on each one of these call spreads and see the range. I mean, there are some call spreads where you could try to participate to the upside. I mean, there is a whole day here, so there's going to be some premium in these a little bit. But and then if you were looking for a rollover, is there other ways to play this? Probably, yeah. I mean, you gotta pick them. It gives you that range, that gives you that zone where the call spread is really in play with its ceiling and its floor. But if you click around, you could try to find one that suits whether you think we're rolling over, and going lower, and you might want to go short, or if you think we're going to be breaking higher. So I think call spreads could be an interesting way to play this, again, to find risk, to find reward, but it gives you some of that optionality where, unlike a knockout where you would be knocked out, I mean, the trade is over. With the volatility we're kind of seeing, having some of that optionality today might make sense. So you might want to take a look at some of these call spreads in the NASDAQ if you think that's a way that you want to go. Anything else to add?
Real quick?
Yeah, I definitely think so, because I think we should.
Inventory, yep.
And it's about the economy, right?
Yeah. So, and again, we mentioned OPEC Plus yesterday. So we have OPEC meetings today. We had the OPEC Plus meeting yesterday talking about how global supply is going down by 1 point, whatever it was, million barrels per day. That, man, supply is going down. And we expected there to be a rally up in price. Now, remember, I mentioned OPEC does have a stake in what the price of oil does, meaning if it goes up, they make more money. So they're not necessarily the most unbiased kind of statements. And last time they made a statement that raised the price of oil, a couple days later, we got kind of a complete reversal because, basically everybody was saying, yep, demand is going to be low for another year and a half. Went directly against what OPEC said, magically, right? But today, as you can see, it has now been bumped back up, and crude oil inventories are now considered an orange kind of intermediate play or intermediate impact event. I mentioned that there's a little primate with darts over here as well, and you can see what the past looks like. They get it right about once a quarter, but you guys can see these are vastly different. I mean, December, it was supposed to be 0.9. It came in at 15.2. I mean, huge differences here, right? So obviously, again, inventory is one of those things that you can see. The color is a miss. Like I said, once a quarter. I think the last one was, what was it, January? And then the last time they got it very, very close was in June. So once every 6 months, What has it done now in the charts? Let me go through. Where is it? Here's a level in oil. Now, oil, when it broke above this $54 mark, there's a little bit of what I would call a pothole or speed bump, a little hiccup right here in this last big push down, right? The next one's not up until about the 59 mark, but they're right around where we are right now, this 55.50, the 5550. There is a psychological level sitting there. Now, this is on a daily chart. I just wanted to show you where the level originally came from. Now we can drop it down and we can go back into an hourly, and we got to come all the way across. We talked about this yesterday, getting that Harry Potter confirmation where it pushed up and pushed higher. Well, we did manage, and we're super, super close up to this 55.50. Now, psychological level, the news is telling us that, let's see, what is the forecast right now? The forecast is it's supposed to be just slightly negative. But then again, last time was just supposed to be slightly positive, and it came in a gigantic mess, right? So they may or may not be able to kind of actually get it in there. One thing I'd show as well is if we look over at, again, consumer sentiment, okay, what are people feeling? This has just recently switched over to 59% of clients are net short. Now, you guys know how when I look at, you guys probably can't see this. Let me blow this up a little bit bigger. Right there, right in the middle.
There we go.
Right there. You guys can see it, right? typically when this goes above like the 75-ish mark, when everybody is going one direction, I tend to get very contrarian and kind of roll it the other direction. 59 just means that the shift is starting to happen. Okay, so again, I'm looking at this saying, hey, listen, IG's consumer, Daily FX's consumer sentiment is shifting more towards the short. I'm seeing this in a position here where we're coming up to inventories. And again, it was an okay move in the overnight session. We went up about 50 cents. That's not a huge, European session move. OPEC is saying, hey, supply is going down across the board. We have a number that comes in today, and it shows us surplus that we have instead of being negative 9.9, say it comes in positive like 5 million barrels. Again, that goes directly what OPEC said. So it may be interesting. And look, OPEC, JMAC won't discuss group's oil output. Again, they don't want to talk about it, right? We're not going to talk about us trying to produce more because we don't want people to know that we just jacked the price of oil, but we're going to start producing more of it so we could sell it at the high price, right? I mean, that's the only reason you don't discuss what the oil output is going to be. So, it smells a little fishy to me, but I mean, who am I? What do I know, right? But again, I think 55.50 is a decent area to start looking for some type of a rollover. As I mentioned before, I like this area right down here, the 54.20 to 53.90. It's the area that we use for the pullback for the last Harry Potter. Again, coming base, that's going to be another area where I'm looking to get short. So for today, a little bit more of a bump. I'd be looking to go down. Again, if the number is able to surge it, then I'd definitely be looking for a way down as long as we stay within that zone. And we'll get that data in about an hour and 15 minutes.
All right, let's just do a quick look, right? Because we don't know. And by the way, you sound very distrusting of OPEC.
I know, right? They've ranked us over the coals for 50 years, and this is the year of unity. I should just forgive them and trust them,
So, right. So I think it's actually wise to take what they say with a grain of salt because they clearly have a vested interest in where the price of oil is. And I do think it's interesting how they say, hey, supplies are low, supplies are low. The price of oil starts jacking up, but we're not going to tell you what we're producing. We're not going to tell you that because
if people want an unbiased source, in my opinion, if you guys remember back to the education seminar that we did in August, September, I forget when we did that one. When I did it on gold and oil, BP actually had some really great data that they came out on a global level, not just for BP, because BP is just a very small producer. There was a really great thing about what they saw demand being lower, and that report came out before COVID even happened. So they were already trending it, saying, listen, we're shifting into these renewables and other things, not just basically oil, because this is what we see the trend is on a global basis. So if you guys don't see that, I believe you can find that on the Nadex website or on their Nadex page. Go back and look at that one. It has links to the different BP reports that come out twice a year that talk about that. So if you're looking for unbiased on oil, go over there.
And that is definitely on our YouTube page as well as on the learning webinar section of the website. You'll have to go into the archive and you'll be able to dig that up. I'm sure you could find it. Because we don't know what's going on with oil, because we don't know where the numbers are going to come in. The knockouts might be an interesting way to play it. Again, if you're looking for a rollover, defined risk, defined reward. If something were to go haywire and it touched a boundary against you, your losses are stopped. And if it goes your way quickly and then comes right, and you'll get knocked out for your maximum potential profit. You don't have to constantly be keeping your eye on the market with the knockout, in as much as if it touches one of the boundaries, you're out of the trade, either for your maximum profit or maximum loss. So, and if you want to rotate between some of these knockouts, depending upon whether you were going long or short, you can quickly see on the charts where those boundary levels are, and where the floor and the ceiling are for each knockout.
There's also an interesting call spread, but I'll leave it with that. We're going to end up going to 10 o'clock.
You know what? No, let's just take a look, because the call spread gives you that optionality.
Yeah, there's an interesting call spread. So if there is a spike higher, you're able to get a little bit lower risk, in my opinion. If it goes against you, again, small risk in the trade, but for a big miss in oil, typically can move $1 to $1.50. So you got to kind of take that in as far as profit targets go. The indicative is at 55.35 right now. There's one that's slightly, again, to the downside, out of the money, but that makes the risk a little bit lower. And again, if it drops $1, are you able to get at least your 1 to reward ratio? The answer is yeah, most likely that'll happen unless there's something really, really crazy happens. But again, it's one of those nice things about Nadex. The risk is able to be low, being slightly out of the money. If it goes against you, what do you lose? You lose the cost at the end of the transaction plus plus the fee, which is $1 per contract. So again, very very small for the amount that the potential that it could have. And again, you're putting that risk there for potential. So
I'm going to flip it back over to you. Is there anything else you want to cover? We went a little long today, but it was there was definitely some fun, interesting things to talk about the economy and the markets. I don't know if you want to, if there's anything else that you wanted to put out there at the last second.
I don't think so today. I'll end up going to like noon. Like I said, there's a lot going on in the markets, but I think as far as the best opportunity, I think we've covered those as the best opportunity. There's that's about it for me.
All right, I wanted to put it out there to you quickly. So with that, thank you for joining us today. You got any questions for Nadex? Anything about our products, our markets, your account, please email us, customerservice@nadex.com. We are here to help. Email us, customerservice@nadex.com. Got anything for Brian? He is also accessible. So please, if you got questions for him, I know he engages with quite a few of you every week. People, email him, support@keeptradingsimple.com. With that, I think we're pretty good. We got the U.S. equity markets, the cash equities opening in 9 minutes. So Brian and I will be back again tomorrow, and we'll do some more analysis. With that, want to wish everyone good luck in the markets.